Hello viewers, this is Geeta. Welcome to my channel. Today we are going to see question number 2A of CA Foundation Accounts Exam May 2026 for 10 marks. Okay. On going through the sum, we will see that this is a machinery is bought on 1/4/23 for 60 lakh, and on October the part of machinery which was purchased in April was has become obsolete and it was auctioned. And on the same day, a new machinery also acquired, and there was some installation charges. And the company is providing depreciation at the rate of 10% per annum WTB method. They have asked you to prepare machinery account, provision for depreciation, and machinery disposal account as on 31st March 2026. On going through the sum, we came to know that we have to prepare machinery account, provision for depreciation, and machinery disposal account. Immediately, when there is a provision for depreciation and disposal account, it should come to your mind machinery account will appear at its original cost. Original cost means all the cost which is included, all the incidental expenses for functioning that asset, that will be capitalized into its cost, such as freight, erection and installation, even trial run, etc. In case of second-hand machinery, it includes repair charges also. So we have to record all the assets, whatever they are having will be recorded in the machinery account at its original cost. And when a machinery is disposed of on that date, either it is written off or auctioned or sold on that particular date, that part of that machinery will be removed from machinery account and will be taken to machinery disposal account. Disposal means from that machine will get completely written off. Okay, from that account. Okay. Now provision for depreciation. Provision means it is a liability. So it will have always have a credit balance. So at the end of the year, every year, we have to provide for depreciation. Okay, that depreciation will get accumulated in the provision for depreciation account. What is the journal entry? Profit and loss account debited to provision for depreciation account, because depreciation is a charge against profit. If you are not understanding, hope you know that what is a charge against profit. Still, if you are not having, please leave it in the comment box. I'll explain you. So it is a charge against a profit. So we will be debiting profit and loss account and will be crediting the provision for depreciation account every year at the end of the year. But in case of a part of a machinery auctioned or sold on that particular date, whatever the depreciation got accumulated will be transferred to machinery disposal account. Here you see that in the provision it gets accumulated. So all that will be on the credit side. So you have to debit the provision for depreciation account and credit the machinery disposal account. But in case of machinery is an asset, will always have a debit balance. So when you are removing a machinery from that account, we will be crediting the machinery account and debiting the machinery disposal account. And in the machinery disposal account, whatever the amount fetched by auction or sale, that is will be credited. Why? Money is received on auction, so bank account will get debited and machinery disposal account will get credited. Ultimately, the balancing figure, whatever may be, whether it is a loss or a profit on sale of machinery, will get into the disposal account. If it is a loss, disposal account will be credited and profit and loss account will get debited. In case of gain, the other way it would be. Okay, P&L account will get credited and disposal will get debited. So let us see the sum for convenience and time saving. I have already entered all the things with the workings. So I made clear what to do and what not to do. Any queries, you are welcome. Please leave it in the comment box and don't forget to subscribe and share this video to those who are interested in learning such subjects. Okay, your contribution by subscribing will encourage us, motivate us to give you more and more. And any specific requirement, please leave it in the comment box and please leave from where you are watching and what is your goal and when are you going to appear for your exam, etc. Okay, let us get into the sum right now. See here, first the bank account. This amount has got why I 60 lakh rupees. I just bifurcated that machinery into two parts so that your calculation will be easy when you are removing a particular part because you are not going to remove the total machinery. We bought a machinery for 60 lakhs and a part of it, which is of 4 lakh rupee, got auctioned because it has become obsolete. Okay, so I made it M1 and M2. You can name this 4 lakh as M1 as you wish. It doesn't make any difference. Okay, so one machinery they got it for 56 lakh and the other machinery for 4 lakh. So the total comes to 60 lakh. At the end of the year, as I have already told you, in machinery account, we are not going to record depreciation or not. We are not going to reduce the value of the asset. This will appear as such in your book. So in the account, we are bringing the closing balance as 56 and 4 lakh. On 31/3/24, we have to provide for depreciation. That is 10%. I gave the calculations here. You can go through it. 56 lakh at the rate of 10% on 31/3/24. For the machine number 1, it will be 5,60,000. And for the machine number 2, 4 lakh rupee at the rate of 10%, it is 40,000. So we have to record it in the provision for depreciation account. As I have already told you that P&L account will get debited to provision for depreciation. That is your journal entry. So I have written on the credit side on 31/3/24 by profit and loss account. Depreciation for M1 is 5,60,000 and for M2 it is 40,000. The totaling 6 lakh. This is carried down on 31/3/24 and brought down also on 1/4/24. Now again here on 1/4/24 to 31/3/25, nothing has happened because the part of that machinery, this one, M2 is auctioned, become obsolete only on 1/10/2025. So as on 31/3/25 also, the same balance will carry it on. Okay. So I brought down that on 1/4/25, this was the thing. But on 31/3/25, we are supposed to make the provision for depreciation. Okay. As it is written down value method, as on 31/3/25, we have to reduce the earlier depreciation to bring out the book value. Okay, on this is 50 lakh 40,000, 10% is 5 lakh 4,000, and for 4 lakh machine, that book value was 3 lakh 60,000, and 10% comes to 36,000. Okay, so we will be recording this in our provision for depreciation account. On 1/4/24, the opening balance was 6 lakh for both the machines. And now for the current year, the depreciation is on written down value 5 lakh 4,000 and for M2 it is 36,000, totally 5 lakh 40,000. So the total comes to 11 lakh 40,000 that is carried on 31/3/25. And it has become the opening balance on 1/4/25. 10 lakh 64,000 for M1 and 76,000 for M2. When you break up like this, it will become very, very easy when you are disposing the particular machinery. Okay. Now coming to this machinery account, on 1/4/25, the balance was same, 60 lakh. And now they purchased on the date of auction, they purchased one more machinery on 1/10/25. Let us name it as 3. That is for 7,90,000. It was purchased for 7,50,000, and there is some installation charges 40,000. This has to be capitalized to machinery. So it is 7,90,000. On 1/10/25, this M2A is become obsolete and auctioned. So we have to remove it from the machinery account, take it to disposal account. So I have removed the M2 for 4 lakh rupee book value and taken to my disposal account. Okay, 2 on 1/10/25. This is gone as 4 lakh rupee. Okay, now other machines were continuing. Okay, in the machinery account, the other machines will continue. Balance carried down for M1 is 56 lakh and M3 is 7 lakh 90,000. So the total comes to 67,90,000. So far as machinery account is concerned, it is over. Now on 1/10/25, we have to provide for depreciation for this particular machine, and on 31/3/26, we have to provide depreciation for the remaining part, that is machinery M1 and the machinery purchased on 1/10/25 up to 31/3/26 M3. Okay, so this is, we are going to remove this M2. So M2 is book value is 3,24,000 written down value. So we have to calculate 10% for 6 months, because from 1/10 from 1/4/24 to 1/10. Okay, April, May, June, July, August, September. So on 1/10 September, 30th September till 30th September, it is 6 months. So 16,200. Either you can do it like this, divide it by 2, or straight away you can calculate 5% on 3,24,000. That comes to 16,200. And for the other machine, M1 up to 31/3/26, that was there for the whole year. So 1/4/25 to 31/3/26, the book value was 45,36,000, because after subtracting the depreciation amount, 10% comes to 4,53,600. And for the new machine again, this was bought on 1/10/25. So again for 6 months. October, November, December, Jan, February, March, 6 months, 39,500 depreciation is provided. See here in the depreciation account, on 1/10/25, M2 is provided depreciation from April 25 to 1/10/30th September, that is for 6 months, 16,200, and on the date of 31/3/26 for the rest of the machines, M1 on 4,53,600 depreciation, and M3 39,500 for again half year. So we have totaling this, and for M2 the total comes to, already we know it was 76,000 here, the opening balance, and we added 16,200. So 92,200, this has to be removed from provision for depreciation account and transferred to disposal account. So when you are removing it from provision for depreciation account, provision for depreciation will get debited and disposal account will get credited. See here in the disposal account, the amount has come. Okay. Now coming to these two machines that will continue. So that is carried down, and that will go as brought down on 1/4/26 and so on. Now in the machinery disposal account, we have auctioned that machine and got 2,25,000. So as I have already told you, bank account will get debited because it is a receipt. Okay. And this account will get credited. Provision for depreciation we have transferred from depreciation account. So the total comes less. So there is a loss on sale of this particular machinery that will go to your debit side of profit and loss account. The total will come here. Here the machinery disposal account gets closed. Hope you enjoy this video and learn these techniques. You just repeatedly do this at least after 4 days or 5 days. If you do go on, repeat it a number of times only for getting a speed, because speed and accuracy is very, very important in your examination. Accuracy, almost you need not to worry because you may be using a calculator, but for speed, you have to write and practice. You have to write and practice, then only you will be able to do it. Practice makes the man perfect. So thank you for watching my video and share this to the people who are you, for whom it is useful. Thank you.